Datavault AI Inc., trading on the Nasdaq under the ticker symbol DVLT, is currently showing a live intraday stock price of $0.36, representing a sharp drop of nearly 9% during the current session, as heavy trading volume puts significant pressure on its recent valuation. While typical retail investors looking at the ticker right now see a microcap stock struggling under the weight of penny stock volatility and recent executive insider sales, the actual underlying reality presents a massive divergence. Just days ago, the company quietly advanced a massive $2.0 billion structured financing term sheet with an exclusive global asset tokenization mandate, completely flipping the script on its apparent capital constraints. This massive gap between the public market's pessimistic price discovery and a multi-billion-dollar backstop setup creates a stark landscape where traditional valuation models seem entirely disconnected from the company's structural moves. The common consensus among small-cap observers using general trading tools is that this is simply another highly volatile tech transition play, especially considering its recent corporate pivot from its legacy identity as WISA Technologies. Traders logging into popular platforms like the Robinhood app or browsing standard lists on various investing sites look at the historical 53% decline over the past year and assume the business is running out of steam. However, the contrarian angle that demanding analysts are tracking tells a completely different story. By examining the recent Q1 2026 earnings report, we see an entity that actually beat consensus expectations by a healthy 35%, delivering a net loss per share of $0.09 against the anticipated loss of $0.14. This structural improvement indicates that the heavy capital expenditure of the past few quarters is beginning to stabilize, even as the market panics over minor open market insider liquidations from key executives. To understand the intense tension currently driving this stock, we have to look closely at the massive intraday swings and institutional mechanics playing out on major order books. For investors utilizing advanced systems like the Interactive Brokers platform, the trading data reveals an average daily volume exceeding 56 million shares, pointing to intense liquidity and highly active retail and institutional speculation. Much of the recent downward pressure is tied to short-term microcap dynamics rather than a fundamental decay of the enterprise. Institutional tracking via large brokerage clearings shows that while retail hands have been shaking out due to the stock dipping toward its 52-week low of $0.25, larger blocks are quietly adjusting their positioning. This institutional churning is normal for companies executing structural overhauls, but the volume spike combined with the recent price compression indicates that a massive tug of war is occurring between short-term momentum traders and long-term asset-backed strategists. When evaluating an individual brokerage account filled with mainstream holdings like Tesla stock, Apple stock, or Nvidia stock, adding a high beta microcap like this requires a firm grasp of macroeconomic and sector-wide pressures. Right now, the entire small-cap tech sector is navigating severe liquidity tightening as broader market capital remains concentrated in massive mega-cap technology firms. This concentration leaves smaller players, regardless of their operational milestones, to fight for scraps of market attention. For anyone seeking investment help or utilizing automated allocation models like Schwab Intelligent Portfolios, these starkly volatile equities are almost always filtered out due to automated risk parameters. Yet for practitioners of active self-investing who prefer to build a custom portfolio outside of standard Fidelity investments or automated robo-advisors, the recent partnership announcement with Perpetuals.com to list massive real-world asset token initiatives represents a foundational shift that broad market indexes completely ignore. Let us break down the exact history and architecture of this business model to see how it reached this critical juncture. Datavault AI was originally formed back in 2010 as Summit Semiconductor LLC, later converting to a Delaware corporation and going public in 2018. Over the years, the company operated under names like Summit Wireless Technologies and WISA Technologies, focusing on spatial audio and wireless sound engineering. The massive shift occurred at the end of 2024 and early 2025, when it completed an asset purchase from the privately held Datavault Holdings, formally changing its name to Datavault AI Inc. Today, the business operates an integrated ecosystem centered around data valuation, using proprietary data scores to help enterprise clients manage, secure, and capitalize on their organizational information. It also retains its acoustic legacy, and the board has recently requested a complete plan for a potential dividend spin-out of that acoustic sciences division into a separate public entity, which would provide existing shareholders with direct exposure to two distinct pure-play businesses.
Understanding this corporate history is essential when assessing the massive disconnect between what the public expects and what the operational reality presents. The market looks at the legacy of a wireless audio company and prices it like a struggling hardware firm, but the reality is an enterprise scaling an infrastructure designed for distributed network intelligence and digital ledger validation. This brings us back to the recent quarterly financials, where the company booked substantial changes in its operating lines, showing a massive revenue spike to over $33 million in the final quarter of last year, followed by a normalization to $3.42 million in the most recent session. Operating expenses remain high at $31.06 million due to heavy research and development outlays and compliance fees, but this is exactly where the strategic financing comes into play. The $2 billion structured financing term sheet is intended to completely remove the traditional capital raising overhang that typically dilutes equity holders in the microcap space. Comment below how many shares of Datavault AI you currently hold in your portfolio right now, or if you were simply keeping it on your watch list to see how the financing details clear up. When you evaluate the future outlook for this ticker, everything hinges on execution versus market skepticism. In a bullish scenario, the closing of the proposed asset-backed financing and the successful launch of the real-world asset token programs on the Perpetuals exchange could validate the software-driven valuation model, potentially driving the stock toward the consensus analyst target of $3, which sits significantly higher than the current trading price. Conversely, the bearish risks cannot be ignored. If the definitive agreements for the massive financing face unexpected delays, or if regulatory scrutiny surrounding global ledger networks tightens under upcoming legislative votes like the Clarity Act, the company will have to rely on traditional market capital, which could lead to further equity offerings similar to their previous $60 million common stock placement. This dual path underscores the entire thesis of expectation against reality. The market expects structural failure and dilutive pressure, while the company is positioning its infrastructure to capture institutional data management contracts. For individual investors navigating these volatile waters through online investing sites, whether managing a standard retirement vehicle filled with conservative Fidelity ETFs and Fidelity mutual funds, or executing active daily setups via a Robinhood stock trading account, the lesson here is one of structural analysis. Looking strictly at past performance or daily charts on a Fidelity trading platform won't reveal the hidden value of enterprise software pivots or pending corporate spinouts. It requires a deep review of SEC filings, insider ownership trends, and institutional capital arrangements. By keeping your focus anchored on the hard financial realities rather than the broader market's generalized panic, you gain a clearer view of whether a company's operational transformation will ultimately reward patient capital or succumb to the pressures of public market volatility. Ultimately, Datavault AI sits at a highly contested crossroads, where its identity as a legacy tech firm is being completely rewritten, leaving the public market to scratch its head, while the company attempts to construct a multi-billion-dollar asset network behind the scenes.